Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Welcome to Share Shootout. You're watching CNBC Africa, first in business worldwide. Before the break, Sasha and Mike gave us two of their share picks. Let's just have a look at those quickly. Mike Hawort from Applied Capital Insights, Hyprop and AVI. Hyprop got the big Sasha thumbs down. Why? Because even top-end consumers who shop in the shopping centres owned by Hyprop are beginning to get a little bit weary of parting with their money. There is a concern that those top-end retailers are beginning to feel a little bit of pain at the end of a boom in the property cycle. That is the concern of Sasha. He concedes, however, that rates could go down before they go up, but he's worried that when they do start going up, there's going to be a huge bloodletting. Is that a fair comment?
Not bloodletting.
There may be some downside. I prefer bloodletting. There may be some downside in the property sector. So he shot down Hyprop. AVI, always buy the biscuits and tea companies. It was an early lesson that Sasha learned many years ago when he was young. But he bought the biscuits and tea company. The biscuits and tea company, of course, diversified into a multi-branded, high-end distributor and retailer of very expensive shoes, lots of high margins. He likes it. He accepted AVI. Sasha chose Tiger Brands. Tiger Brands shot down. It's simply too expensive. It has got lots of interesting exposures on the African continent, but you may wait a long time, says Mike Hawort, to make your money back on that particular one. Brait, he was strong-armed into accepting it, even though he is feeling that the bottom end of the consumer sector in this current cycle is overstretched and there may be some risk. But he didn't know what was coming third. So let's tell him what was coming third, and let's look at the expression on his face as he goes, I should have waited. What is your third pick, Sasha Naryshkine? 30 seconds on Holdsport.
Holdsport. Well, luckily we had this company just report yesterday, and I think, Mike's looking for a company that's protected at the top end. They do have better margins than a lot of retailers simply because they are selling to a different clientele. So they sell high-end sporting goods, equipment, and they offer a really low base. And I do think at a relatively undemanding multiple, they could be a takeout target, although the competitions authorities have blocked a mass market approach before. Well run, great business, lots of room to grow.
Do you like Holdsport, Mike?
Yeah, I do, but I thought the performance was fairly mediocre. I don't think it's going to pick up from what we saw. I think it was single-digit growth.
But that's comparing it against a World Cup the year before and a World Cup the year before that. So
and we're going into another World Cup year next year too.
Provided, of course, we qualify.
If we qualify. This is true, and that could have a big impact as to whether or not they do well next year. Holdsport, you're concerned about what?
I'm just concerned that there's not going to be really much growth in there at all. I understand the niche orientation of it. I'm not convinced from a retail perspective. If you ask me, would I rather be an AVI or Holdsport, there's no question.
Yeah, but AVI doesn't sell cricket bats, tennis shoes, tennis rackets and shuttlecocks.
They sell very smart shoes.
They most certainly do. But so that segment, you don't like it at all. You wouldn't go anywhere near it.
No, I wouldn't invest. It's too small.
It's too small for him. He doesn't like it from that perspective. Convince me, Sasha, that you should be staying in the game.
Very strong sporting culture in South Africa.
Continually diminished by the fact that we're going to more and more of these quasi-private schools that can't afford to carry the sports fields.
I'm not talking about them, I'm talking about their parents.
In the days of the Rinderpest, when you were at school and still playing lots of sport, you did a lot more sport, and your framework is very different to what kids who go to Boston College or kids who go to Crawford College experience today. Isn't that a fundamental difference?
If you have a look at the cycling fraternity in South Africa specifically, that has grown in leaps and bounds, and those are high margin cells. And if you have a look at the Four Ways Sportsman's Warehouse, where have they just extended? The cycling part. And they've opening up stores in underserviced places. They service your bike, they offer you good advice on which running shoes to get. Admittedly, you can get those advice at more niche, but not at the
price.
Yeah.
You're not changing your mind, you're shooting it down.
No, I just also think that there's a tremendous amount of competition that can come out from, small running shoe shops or
that exists already.
A lot of these, they're not. I wouldn't call them moms and pops because they're not. But real niche areas that can actually just continually nibble around the fringes of this business.
If you are a young parent of children, as Sasha and I are, and they need sporting stuff. I'm not going to 5 niche shops. I'm not going to go and sit and be bull-dusted by 5 different salesmen who probably are not really qualified to sell me the sort of stuff they're doing. I'd rather go and be sold to by one unqualified salesman in a big warehouse. And I'm yet to be put through the torture of going to Sportsman's Warehouse on a regular basis. But I suspect I will be a shopper there soon.
Bruce, can I just add, they do have an online presence, and it's in niche mountain climbing and kind of cycling and running stuff. So it's that, first ascent and
you're shooting it
track
down. Too much competition, doesn't like it. You're gone on that particular front, Sasha. So all depends really now as to how convincing Mike Hawort from Applied Capital Insights is on his very adventurous Bloemfontein-based pick. How many companies are based in Bloemfontein?
Yeah, I don't know.
Only one.
Only one.
Raubex. Why do you like it? 30 seconds.
Been profitable for 30 years. It's got 2 divisions. The one is essentially a road building division. The other is a materials division. They get a lot. They crush a lot of aggregates from the mines. Get them at a low cost. Very good margins in that business. They've just bought a bitumen business from Sasol to expand that part of the business because they've had some problems with payment from government, particularly the Free State province. They're now starting to expand into sub-Saharan, not sub-Saharan, but Southern Africa.
Okay, now that's an interesting point of why I would, if you presented this one to me, shoot it down in a blaze of glory, is because I don't know when last you arrived in Harrismith. You took the Bethlehem Road, you took a left, and you went up into the mountains of the northern Drakensberg on probably the worst road in South Africa that was, I think, a Raubex project, which was then abandoned because of the Free State government's propensity to spend money on websites rather than roads. The Free State government is a disgrace, and its roads division is a bigger disgrace, and Raubex is still heavily exposed to that.
Bruce, we desperately need road upgrades in this country. So in terms of demand, the demand is definitely there. Now, whether the government can actually follow through is a big question mark. But a lot of their customers, come from AXA, from Eskom. There's some very big customers beyond the actual provinces. Sanrail's a big one.
Is that enough, though, Sasha, to boost something like Raubex, which is massively dependent on a failing public sector?
Bruce, I think I heard you once on a show say something along the lines of South Africa's debt to GDP is a lot higher because of parastatal debt.
Yeah.
Now that essentially is backed by the government of South Africa. And I think this tolls debacle will make investors think twice when lending money to a parastatal in order to be able to develop what is essentially a world-class infrastructure here around the byroads in Johannesburg. I'm well aware of that road that you're talking about. It's like the Wild West out there. People just drive wherever they want. The problem...
Well, no, it's wherever there's there's the pothole, and that's one track, and everybody's trying to drive at the same track at the same time.
Biggest problem for me is the costs that government are increasingly having to pay to an ever-expanding workforce. Now that means less money for essential projects, unfortunately, and Raubex fell squarely in that. So while I'll concede that it's probably the best at what they do, just in terms of that space, there's something that just
you're shooting it down,
me.
not because it's not a great company, not because they're not really good at what they do. They're shooting it down because their clients largely suck.
Their clients do suck, and their clients are all backed by the same people, unfortunately, with a diminishing pool.
Kaboom.
But I heard from the president that we've got all this massive expansion coming about.
I heard it from the president too.
And I heard it from the Minister of Finance as well.
I heard that.
I'm waiting with bated breath, but so my expectations are full.
Right. I heard. No, I won't tell you what I heard because I'll probably get sued. So this is where we come to the end of the program, and it's the favorite part of the program because this is where we get to shoot somebody down. Mike Hawort from Applied Capital Insights, Hyprop, AVI and Raubex. Those are his picks. Hyprop, interesting pick, nice company, really good at what it does, runs shopping centres incredibly well. Shopping centres perhaps getting a bit tired. AVI, good running, good smart fancy shoes, lots of colours. high margin, great business, good investment, and Sasha accepted it. He, like me, doesn't like the Raubex pick, not because the people in Bloemfontein aren't very nice, it's just the people who pay the bills don't do so particularly effectively. Sasha chose Tiger Brands, good business, great footprint, great growth prospects, but shot down by Mike. He likes Brait, only because he went by default to Brait, and I think he's a little bit grateful. I think you are grateful, aren't you, that you didn't wait for Holdsport, because then you would have had to accept something you didn't like.
It was opportune.
Okay, opportune. So therefore, I've got to make a choice. And based, I think, and quite reasonably so, as judge, jury and executioner in this matter, I have to get rid of one of my contestants. Both have put up a fine fight this evening, but one of them has to go. And just because he chose a bugbear, I think, Mike Hawort, you've got to go. Mike Hawort from Applied Capital Insights has been shot off into the ether. Perhaps he'll have a job servicing roads for Raubex somewhere in the Free State, and maybe even he'll get paid on that particular point. That's it from this edition of Share Shootout. We'll be back next Tuesday, right here on CNBC Africa, first in business worldwide. Well done to you, Sasha.
It had to come by default eventually.
It had to become, eventually you start feeling sorry for him and you just let him win. Remember to catch me on Twitter, give me your Share Shootout suggestions and your thoughts. I really like your picks. What really are. Yeah, I really like your picks. You can follow me on Twitter @BruceBusiness. It's one word. Until next time, we continue to pick out a winner and shoot out the rest. Sasha, a worthy winner of Share Shootout this evening. Good night.